Stephen, I am curious whether or not you think this debate about whether a dovish or a hawkish pivot this week, at least in tone, is material. Do you think it'll be that conclusive?
I don't think the Federal Reserve is ready at this point to put its guard down at all about inflation. It's unfortunate what I think you just heard from Steve Leisman. The economy has already reached a fairly close to stall speed. It's carrying a heavy burden of inflation that's slowed the economy down. And the Fed's tightening is actually going to impact the economy most, probably in the period after inflation already recedes. But this is what happens after you've had a Federal Reserve that eased during a boom year in 2021 and has in part delivered the inflation this year. So it would really come down to, I think, any change in view from the Fed that they're going to look forward, that they're going to see sort of the underpinnings of inflation come down some. That would eventually allow them, I think, a slightly more protective stance on the economy. I just don't think that they're ready for that just yet.
That's interesting. Jimmy, I wonder from your standpoint, if you think the market tries to get way ahead of what eventually will come, that day where they say we've reached a point where we think we can relax for a bit and see what the data brings us. If that's true, how do you think stocks can perform in the back half of the year?
Well, I do think that pivot point probably won't come for another couple of FOMC meetings. Keep in mind that inflation has been accelerating sequentially month on month over the last 2 months. So given that backdrop, there's no way the Fed can back down right now. We need to see another several months of deceleration sequentially for the Fed to start to pivot. But I do think that will be received well initially. But again, by that time, we're probably well into the middle of a recession. So we do need to pivot first, but that doesn't mean that it will mark the bottom in the market.
Stephen, how much weight should we place to the fact that gas prices have come down so significantly? Is that any evidence that inflation has peaked? I see that you recently reduced your overweight in commodity-related equities. Is that supportive of that?
Well, it's a little helpful. It is certainly going to be helpful at the margin for consumers who have just lost a great deal of income support. This year, we had consumers across the economy face this inflation without, again, the income subsidies that they had during the boom year past. So now that they've suffered through that and we're getting past that, it's going to help a little bit to take headline inflation down. There can be some broadening in inflation. There's unfortunate. The things that the Federal Reserve is looking at most importantly, services inflation, hasn't had its chance to fully rise yet. Well, it's an official member of the index of lagging economic indicators. If you take a look at services inflation, core services. So this is the sort of thing where, okay, it's a lagging indicator, it's going to continue to rise, and the Federal Reserve is driving forward-looking policy, focusing to a good extent on those lagging indicators. So it's exactly the reason, as you just heard, for the Federal Reserve to take a little bit longer and wait for conditions to change. Unfortunately, again, the weight of tighter policy is cumulative. It will include quantitative tightening, perhaps into the coming year. And that's going to mean, again, a weaker economy. And we do think, again, the good news out of that will be lower inflation in the year to come. But it's going to take time.